What happens when the reverse repo facility gets low? What are some of the liquidity actions that they can resort to? How bad would they let liquidity get before they were forced to intervene? Those types of things can all determine what Bitcoin does in any sort of given quarter or couple quarters. But long term, next 2 years and longer, I'm quite bullish. I have higher conviction that throughout the course of 2024 and 2025, it'll be notably higher than it is now. That's kind of my overall base case. So I still think we're fairly early phase in the bull market, but that doesn't mean anything about 3 months or 6 months. Generally, my research shows that Bitcoin price is heavily correlated with liquidity in any given multi-month period, generally speaking. And so, kind of the stuff we talked about earlier in the conversation. What happens when the reverse repo facility gets low?
As Bitcoin moves through the volatile world of finance, investors are curious to know where it's headed. Will Bitcoin continue to rise and sustain its price, or will it eventually crash? Bitcoin's recent price fluctuations, currently hovering around $51,000 to $52,000, have sparked excitement and uncertainty among investors. While short-term movements can be unpredictable, many remain optimistic about Bitcoin's long-term potential. One factor contributing to this optimism is the structural bullishness surrounding Bitcoin. Despite short-term uncertainty, there is a prevailing sentiment that Bitcoin's value will continue to rise over the coming years. Expert analysts such as Lyn Alden even predict that Bitcoin could potentially reach six-figure valuations within the next couple of years. But alongside Bitcoin's rise, there have been significant shifts in government financial strategies, particularly in the United States. These recent developments in borrowing strategies and monetary policies have raised questions about the cryptocurrency's future direction. Lyn Alden pays attention to the Treasury Department's financial decisions. When the Treasury Department decided to switch from selling long-term bonds to selling short-term Treasury bills, it certainly changed the US economy in terms of liquidity. And the amount of money in circulation can impact how people invest and how assets like Bitcoin are valued. By issuing short-term Treasury bills, the government can access more immediate funds, injecting liquidity into the economy. Consequently, this strategic move by the government affects the reverse repo facility. Reverse repo, short for reverse repurchase agreement, is a financial transaction where one party sells securities to another with an agreement to buy them back at a later date. This arrangement allows the party selling the securities to obtain cash while using the securities as collateral. Reverse repos are commonly used by financial institutions and central banks to manage short-term liquidity needs and adjust interest rates. This can indirectly affect Bitcoin's price through its impact on overall market liquidity and investor sentiment. If the reverse repo facility continues for an extended period, it could signal ongoing tightness in a financial system's liquidity. In such a scenario, investors might become more risk-averse and allocate fewer funds to assets like Bitcoin, leading to downward pressure on its price. Alden suggests that it's reasonable to expect the reverse repo facility to last for another 3 to 6 months, depending on various factors such as the actions of the Fed and potential liquidity events. Now, let's take a look at some clips of Lyn Alden in her discussion with Anthony Fatsias regarding the global financial system and how this impacts Bitcoin's performance. As we share these clips, we ask for your support by liking, commenting, and subscribing to our channel. This helps us continue to provide you with insightful updates on crypto finance. We hope you enjoy the video.
I think so for example, I think if you want to be in that bullish kind of tech area, I'm structurally bullish on Bitcoin still. Today it's been kind of bumping around 50,000, and there's kind of maybe some local excitement about it, but I don't think it's really widespread yet. And I have no particular view on what it does for the next 3 to 6 months, but I'm structurally bullish for multi-year view. We've already hit some of the targets. I have a very big range for what I expected to go to. I've been trying to stick to like a 2-year view because I don't really know for sure what's going to happen in 2024. I have higher conviction that throughout the course of 2024 and 2025, it'll be notably higher than it is now. That's kind of my overall base case. I'd be surprised if we didn't see six figures in that 2-year view. Certainly possible that we won't, but I'd be surprised if we would not. And from there's a very big range because you're basically you'd be trying to predict what do humans do when the price goes up. Well, how much of them will buy, I don't know. But basically, we know the supply side. We can also look at on-chain indicators to see, for example, the behaviors on the supply side. So you can look at how many coins are held by entities that have a very low propensity to sell. And during bear markets, that ratio goes up. The people that have been buying coins in the bear market, that have gone through a lot of that, they're generally not going to sell anytime soon, even with a significant bull run. It would take a very high price point to get those coins out of their hands. On the other hand, when you have bull markets, you have a lot of new buyers coming in. Generally, that's the handful of times when those longer term holders tend to sell. They sell into that strength. We've not really seen that cycle start yet. And so I still think we're fairly early phase in the bull market. But that doesn't mean anything about 3 months or 6 months. Generally, my research shows that Bitcoin price is heavily correlated with liquidity in any given multi-month period, generally speaking. And so kind of the stuff we talked about earlier in the conversation. What happens when the reverse repo facility gets low? What are some of the liquidity actions that they can resort to? How bad would they let liquidity get before they were forced to intervene? Those types of things can all determine what Bitcoin does in any sort of given quarter or couple quarters. But long term, next 2 years and longer, I'm quite bullish. Was the Treasury shortened their average duration of bonds, right? So instead of issuing long duration bonds, they issued short duration T-bills. And what makes that relevant is that there was a $2 trillion build-up reverse repo facility that money market funds primarily were investing in. And that basically represents available capital, but only for short duration government debt. It can't really be used to buy that longer duration stuff. And so by shortening their average duration, they're able to pull money out of the reverse repo facility and spend it back into the economy. And now they're down to about a quarter of that. So now they're down to about 500 and some billion. So they can't do that forever. But that's been a very long runway of additional liquidity they've been able to push back into the system. And again, this was outlineable in advance, but as a fairly rare occurrence for the Treasury to shorten their duration this much. So the Treasury general account is no longer increasing, so that's not really sucking any liquidity out of the system. And so overall, I think you still have another quarter or two, or potentially longer, of reverse repos. And then we'll see, does the Fed, I guess the main choice is to see if the Fed kind of preemptively adjusts to that, or if they wait until there's a liquidity event and then jumps into it. So if there's a liquidity event, you can certainly see a down move in any sort of high volatility assets. But I'd probably be a buyer of those types of dips for assets that I like.
In the United States, inflation has increased beyond initial projections, which have had a significant impact on consumers. Alden suggests that energy-related investments can serve as a valuable hedge or protection against other types of investments during certain economic conditions. Historically, higher energy prices have posed significant risks to traditional investments, leading investors to seek alternative avenues for portfolio protection. While stocks and bonds have always exhibited an inverse correlation, periods of higher average inflation have seen energy stocks become a more effective hedge against inflationary pressures. Interestingly, Alden also highlights the resilience of blockchain networks like Bitcoin in such situations. Despite potential energy-related fluctuations, Bitcoin's design, particularly its automatic difficulty adjustment feature, ensures stability and continuity in operations. That said, in the face of inflation, while traditional investments may encounter difficulties, Bitcoin remains a resilient asset, providing investors with a distinctive safeguard against economic uncertainties. Let's take a look at more clips of Lyn Alden as she explains this valuable information.
I think energy is a very useful hedge because higher energy prices is one of the major risk factors for non-energy equities. And so in this type of environment, sometimes energy equities or energy things like that can be a better protection against your other equities than long duration bonds can be. So in 40 years, generally stocks and bonds were inversely correlated. But during periods of, say, higher average inflation, things like energy stocks tend to be a better hedge for those other assets that generally prefer, tech-driven disinflation. High multiple growth equities, for example. They generally prefer low CPI, low interest rates, everything's rosy. that's how, and like large deficits, because then they can keep just grinding higher. But if that does show up in higher energy prices, higher CPI, that requires the Fed to try to be tighter. That results in more political polarization, more risks for kind of issues. And so I like that barbell approach of some assets very much benefit from tech deflation and just overall currency debasement, and then other ones that are generally benefit more from that stagflationary type of environment. So energy price disruptions or growth against insufficient capex and things like that. Bitcoin has a difficulty adjustment associated with it. So for example, if energy costs spike and the price of Bitcoin does not, then the weakest miners go bankrupt or stop mining. And then the network checks every 2 weeks what is the average rate of block production, which depends on how many miners are on the network. And then if miners have fallen off the network, then it makes block production easier. It basically calibrates to the number of miners that are currently on. And so energy, it's in and of itself, does not really directly impact miners. The indirect thing is that governments can use that as a narrative, because governments don't particularly like the fact that things like Bitcoin exist. And so if you get energy price spikes, then you get things like, governments blaming Bitcoin for it, or trying to say we have to push Bitcoin out of our jurisdiction. And so it really can kind of move around where the Bitcoin miners are, or to determine kind of how difficult it is to operate a mining business. But for the most part, it doesn't really affect the blockchains themselves, because that's been taken into account by the design. In fact, that's arguably Satoshi's main addition, because when you put Bitcoin together, there are a bunch of things that already existed. He didn't invent blockchains. He did not invent proof of work. He didn't invent the types of encryptions that he used, but he put it all together, and then he added the automatic difficulty adjustment, which is kind of the control mechanism, the automatic control mechanism that makes it work. Because if you tie money creation to processing power, then as processing power increases exponentially, it would eventually inflate the currency. It would result in quicker block time generation than expected, and therefore more coin issuance than expected. And so having that difficulty adjustment in there makes it so that even as processing power keeps increasing, it does not result in faster block times. And even as you get, say, higher or lower energy prices, the network adjusts for that as well.
As stated by Alden, despite Bitcoin's independence from energy prices, governments may attempt to associate it with energy-related events. This tactic could involve blaming Bitcoin for energy price spikes or crises, even though Bitcoin's operation is not directly impacted by such fluctuations. But why might the government do this? Well, there is a chance for the government to blame Bitcoin as part of a covert strategy to divert attention from larger economic issues. By scapegoating Bitcoin for energy price spikes or crises, they can manipulate public perception and gain support for regulatory measures aimed at controlling decentralized cryptocurrencies. This tactic serves to maintain the status quo of traditional financial systems while undermining the disruptive potential of Bitcoin. In doing so, the government seeks to protect its interests and preserve the existing power structures, all under the guise of combating perceived threats to economic stability. But of course, this is merely a conspiracy theory that many have already suggested, so we cannot prove its legitimacy just yet. With all of this said, Lyn Alden advises us to pay attention to the dynamics of fiscal dominance and times when fiscal and monetary policies don't align. It's essential to not just focus on recent trends, but also to look at historical patterns, especially in unusual economic situations. Understanding these concepts is crucial because they have a big impact on today's economy. Even though they can be complicated, learning about these topics is very important because they help us understand how economies work, helping us make informed financial decisions. How do you think Bitcoin will do as government policies and economic uncertainties change? Share your thoughts in the comments below. Remember to subscribe for more educational content on crypto finance. Your support helps us continue providing valuable insights. Thank you for being a part of our community. As you continue on your journey in this digital age, remember to keep your eyes open, your mind sharp, and your investments secure. Until next time, happy investing.